Welcome to Techquity, our show on tech stocks. I'm John Marino, editor of Thomson Reuters PE Hub. Next, Facebook is benefiting from mobile and Oracle is benefiting from strong sales. Plus, we've got a look at potential soaring and sputtering tech stocks of 2013 with Greencrest Capital's Max Wolf. First up is Facebook. Its one-time albatross is becoming a source of strength for the social network, that being its mobile business. Cantor Fitzgerald is seeing growing monetization prospects for the social network and high user engagement on tablets and phones. Cantor is maintaining its buy rating on the stock and increasing its price target from $28 per share to $33. So far today, Facebook is flat. Mobile is also viewed as an area of growth by Greencrest Capital's senior analyst Max Wolf. We spoke with him earlier about what lies ahead for the tech sector in 2013, from his favorite stock to the one he'd duck next year. I led off our interview by asking him about what the top tech trends would be next year.
I think we're going to see the mobile handset business get more competitive. We're going to see Amazon enter this business. We're going to see what Microsoft can do. We're going to see what RIM's sort of turnaround or at least slow the decay function strategy is around BB10. And I also think we're going to see the big players in tech continue to do, especially on the consumer-facing side, what they'd spent the second half, if not all of 2012 doing, which is everybody is in everyone else's business. And that almost always means margin erosion, which is part of the reason that there's more concern in some quarters about Apple than the other guys, because of course they have the largest margin to erode.
All right, and earlier when we were speaking, you pointed out that this year obviously was a pretty big year in terms of M&A. You said that you feel the same way for 2013.
I think that the M&A is going to continue to sort of overshadow the IPO market. I do expect some big IPOs, and I expect the big IPO of 2013 will be a lot more successful and a lot less bumpy than the big IPO of this year, which of course was Facebook. So I do expect some big successful IPOs, nothing on the scale of Facebook, obviously, but probably a happier story. In addition, I think that cloud and big data are going to be red hot on the enterprise side, and I think that enclosing your ecosystem is going to be the dominant trend in the consumer side. Apple wants you on Apple all the time, whether that's their new streaming music or just making sure that you never have to go off and start dealing with Google. Likewise, Google wants to enclose its ecosystem. Amazon looks to enclose its ecosystem, especially with the phone, and Microsoft doubles down on its consumer products and tries to become the tablet and maybe even the phone provider to the extent that BlackBerry leaves that opening to the enterprise space. So everybody's in everybody else's business and everyone's trying to enclose their ecosystem. And Facebook too, you can see it with Instagram. Twitter will do likewise with Aviary, it's sort of new picture sharing. And I expect a lot of heat around picture sharing and digital across 2013.
All right, and we had actually reported at PE Hub a couple of weeks ago that Zendesk is one of the potential hot IPOs of 2013. What else, I guess, in your book is on the slate that should probably be going public, within the next 8, 12, 16 months? And also, I guess on top of that, can you talk a little bit specifically about the enterprise space? It was kind of the saving grace for Silicon Valley in the second half of the year.
Yeah, I mean, after Facebook, right after May, people decided that B2C was dangerous and B2B was where all the action was. And we also had this big data revolution, whether it was Splunk or Hadoop or all these names, Cloudera coming out. And we saw IBM, we saw Oracle, we saw SAP race into this space and start purchasing everything that wasn't nailed to the ground. And some things that were nailed to the ground, they pried up with a crowbar and swallowed whole. I don't expect that to be as hot, but I do think it will stay hot across this next year. I think we're going to see more of the kind of IPO back burner in the B2C again this year. We're going to see a lot of M&A. We're going to see people buying picture sharing, and I think video, especially HD video and HD video sharing and embedding is going to be absolutely powerful across this year, as also trying to enclose anything that helps you enclose your ecosystem. In terms of who's a big player coming out, Zendesk, great product, hot company, deservedly so, very likely to come out. I think we see Evernote come out, especially based on its sort of a little bit leverage to iOS success in China, 2 million phones over the last weekend, right? So obviously iOS doing very well in China. That's great for Evernote because they've been very successful at scaling up in China. They're huge in the United States. They're a dominant player in their space, right? And I think they're going to have a good IPO this year. Likewise, I would expect Eventbrite to come out and do very well. They get less attention than they probably deserve, but I think they're ready for prime time. I think we might get more rumors, especially in the second half of 2013, about Twitter, but I'm not sure it comes at this point. And I would look for also a little bit of a heat up with a possible attempt at IPO from one of the bigger players coming out in the mobile payment space.
That would actually be very interesting. We actually like to do a segment on Techquity. We call it Soaring and Sputtering. It's the day's hot and cold stock of the day. If you don't mind, what's your prediction for us? What's going to soar in 2013, and maybe who do you see as sputtering?
So I think Samsung is going to have a huge year in 2013. I think that people kind of came late to the party of watching Samsung's upscale, how they moved up the market, and I think that's pretty exciting, pretty interesting. I think that RIM might have a really serious sputter in 2013 because we're looking for them to turn the corner, to at least stop the bleed. And everything about the lead up to BB10 has started to suggest that this would be more of the same, which they unambiguously can't afford. I hope I'm wrong. They have it in them. They just have to deliver it. My fear would be that you might see a continued sputter there, and that there isn't really much room for further misadventure in that spot. I also think we're going to see the big data guys shake up the old database guys, and we could have real casualties of major database companies on the B2B side.
And now on to today's Soaring and Sputtering stocks. Soaring is Oracle, a slew of analysts raising their price targets on the stock after the software firm forecasts strong sales. Shares are up 3% to their highest in more than a year. Sputtering is PLX Technology. The Federal Trade Commission is seeking to block the merger of the computer component maker with rival IDT. The FTC is concerned that they will control too much market share for their products. Shares there down a whopping 18%. That's it for Techquity this Wednesday. Remember, you can follow us on Twitter at RTRS Techquity. I'm John Marino. This is Reuters.